Everyone, how you doing? I want to jump on a live chat real quick because it's getting a question a lot lately, and that is why are interest rates increasing so much? So I wanted to jump on, explain this. Got to go back a long time ago, back to the early 1900s, recession, depression, all that type of stuff. The government came up and said, "Hey, we need to do something to prevent fear of markets, to help stabilize markets, so that way people don't take money out of the bank, all that type of stuff." And so they came up with this thing called the Federal Reserve, and it's a bunch of private banks. There's 12 of them, and basically over the last 100 years, um, they've morphed into the most influential entity in the world, not just in the United States. And so a lot of people are like, oh, well, interest rates are going up because banks are greedy and that's capitalism. No, that's not the case. Okay. So interest rates are based on what the Fed does. So there's a little bit of the market in what interest rates are charged, but it's really influenced by the Federal Reserve. And so what the Federal Reserve does nowadays is they sit there in the United States. They will sit there and say, what's the inflation? What's an unemployment at? All that type of stuff. For the world, when they make these changes, it affects like currency valuations across the world. That's why they affect everything. They're so powerful. But here in the United States, what ends up happening is when we have something like inflation, for example, right now, inflation is going through the roof. The Federal Reserve will want to try to slow down growth and prevent people and influence them not to spend money. So the way they do that is increasing interest rates. And so businesses stop to borrow because the cost of the debt is too high, all that type of stuff. You might not buy a house, for example, because the interest rate's too high. So now you can't afford it. So it slows everything down. Okay. So that is the Federal Reserve. Now, like, let's just say unemployment like skyrocketed. They would drop the interest rate, right? Because now they're trying to stimulate people borrowing and spending more money and keeping the economy up afloat. So basically, what the Federal Reserve is they're doing is they're manipulating the interest rate environment. Okay. And I say manipulating because their actions don't directly affect things like mortgages, it's indirect, but they're all influenced by the Federal Reserve. Okay. So right now in this country, we have a lot of inflation. Real estate prices are going through the roof. Asset prices are going through the roof. So the Federal Reserve is trying to pull everything back. That's why interest rates are rising. And again, if you guys have questions like that, just let us know. Be able to jump on the live chats, and we'll go from there. Talk to you soon.